Ladies and gentlemen, let's talk about something that every ambitious, growth-driven, future-focused person must learn to master: investment strategies. And let me be clear, this isn't just about money. This is about ownership. Ownership of your time, your income, your outcomes, and your future. Because real wealth isn't just earned, it's invested, it's built, and it's multiplied with strategy. Now, I want to bust a myth right out of the gate. You do not have to be rich to start investing. You have to be ready. You have to be willing to stop sitting on the sidelines waiting for the right moment and start using the resources you already have. If you're scrolling social media for hours a week, if you're ordering takeout every other night, you're not broke, you're unaligned. Let's fix that. Most people are intimidated by the word investment because they think it means the stock market, crypto charts, real estate portfolios, and yes, those things can be powerful. But before you invest a single dollar, you need to invest in something way more valuable: yourself. Your personal growth, your leadership ability, your emotional intelligence, those are investments that no crash, no recession, no tax bracket can take away from you. But let's get practical, because this is not just a mindset conversation. It's a money conversation. It's a strategy conversation. And if you want to create freedom, if you want to build a business, retire early, or simply stop living paycheck to paycheck, you have to make smart, intentional investment decisions. Start with clarity. Too many people jump into investments they don't understand. They buy stocks because someone on YouTube told them to. They buy crypto they can't pronounce. They pour money into something they can't explain at dinner. That's gambling, and you don't need to be a gambler, you need to be a student. Learn what you're investing in, know the business, know the trends, know the risk, because when you know, you can lead. And when you can lead, you can grow. Next is diversification. You don't want all your eggs in one basket, and you also don't want your baskets to be all over the place. You want smart diversification, a blend of short-term and long-term plays. Maybe it's real estate and index funds. Maybe it's your business and a retirement plan. Maybe it's education now for returns later. But be strategic, be clear, don't scatter. Align every investment with your vision. Here's what I want you to ask yourself: is this investment helping me become more valuable over time? If the answer is no, walk away. If the answer is yes, double down. You are building a future, not just chasing a win. The power of investment is in compounding, and not just compounding interest, compounding decisions, compounding habits, compounding wins. And let's talk about risk, because yes, investment carries risk. But let me ask you something: isn't not investing even riskier? Isn't staying stagnant, staying stuck, staying safe actually costing you more? The real risk is wasting your time waiting. The real risk is dying with ideas, goals, and opportunities unclaimed. You're not here to play small, you're here to build bold. So whether you're investing $100 or $100, zero, your mindset, your strategy, and your ability to stay consistent are what's going to take you further than any one big break. Build an investment habit. Track your returns, stay informed, get a mentor, and surround yourself with people who think in decades, not days. Here's the truth: wealth is not accidental. It is created with intention. Your investments are a reflection of what you believe is possible. So if you want a different life, you must invest differently. Invest in growth, invest in ownership, invest in strategy, and most importantly, invest in you. Clarity beats complexity. That single truth is often overlooked in the world of investing, but it is absolutely essential. People chase complicated ideas, niche markets, and high risk, high reward promises, thinking that if something sounds difficult, it must be valuable. But the opposite is often true. The real magic in building wealth is found in simple, clear strategies that are easy to understand, easy to explain, and consistent to execute. If your investment plan is so complex that you can't describe it to a teenager, then it's not a strategy, it's a liability. The purpose of investing isn't to sound smart, it's to grow your money intentionally. That requires clarity, that requires knowing what you're doing and why you're doing it. Let's be honest, A lot of people fall into the trap of believing that the more complex their financial plan is, the more sophisticated or successful they must be. So they pile on jargon, they chase trendy investment platforms, they diversify into too many categories, they listen to 5 different voices on YouTube, all saying 5 different things and end up paralyzed. But clarity beats complexity every time. The best investors aren't the ones doing the most. They're the ones doing what makes sense and sticking with it, because they know that consistency compounds and clarity drives confidence. When you start to operate with clarity, something powerful happens. You remove emotional volatility from the equation. Emotional investing is one of the quickest ways to sabotage your future. You panic when the market drops. You get greedy when it surges. You jump from one thing to the next, looking for fast returns instead of steady growth. But when your strategy is clear, when you understand your timeline, your risk tolerance, and your long-term goals, you stop reacting and start leading. You stay grounded. You can make bold moves, but they are based on vision, not impulse. Clarity is what allows you to own your financial plan. You're no longer outsourcing your decision making to someone else. You're not investing just because someone told you to. You're doing it because it aligns with your values, your goals, and your knowledge. For example, if you decide to invest in index funds, it's not because they're the hot trend of the moment. It's because you understand that they offer broad market exposure, low fees, and long-term growth potential. You understand the mechanics, the risks, and the expected returns. You know how to evaluate performance. That kind of clarity gives you control. It builds trust in your own process, and trust is everything when you're playing the long game. This also applies to business investments. Entrepreneurs fall into the trap of believing they need to have 20 income streams to be successful. But too many income streams without clarity equals chaos. It leads to burnout, shallow execution, and missed opportunity. What if instead you focused on 1 or 2 income streams that you deeply understand and execute them with excellence? What if your clarity allowed you to see exactly where your leverage is, where your time is best spent, and what truly moves the needle? That's when your business becomes a vehicle for wealth, not a distraction from it. Clarity also forces you to define what success looks like to you, not to your parents, not to social media, not to the world, to you. Because when you know what you're aiming for, you can engineer your investment strategy around that. Maybe for you, success means retiring at 50. Maybe it means buying back your time so you can work 20 hours a week. Maybe it's paying off your home and funding your kids' education. Whatever it is, you can't build toward it if you don't define it. Complexity will always distract you from your true goal. Clarity brings you back home. Let me say this clearly. You don't need to be a financial expert to be a good investor. You need to be a focused one. You need to commit to learning, to asking questions, to sticking with what you know works, and to resisting the urge to make things harder than they need to be. Simplicity is not weakness. Simplicity is mastery. You will always get farther by doing the fundamentals with discipline than you will by chasing every new opportunity that crosses your path. In the end, clarity is about responsibility. It's about refusing to be passive in your finances. It's about saying, I know what I want. I know how I'm getting there. I'm not guessing. I'm not gambling. I'm growing. When you invest with clarity, you can be patient. You can weather the ups and downs. You can focus on real results, not noise. And most importantly, you can teach others to do the same because clear strategies are replicable. They create legacy. They create change. So the next time someone tries to impress you with a complicated investment pitch, ask yourself, do I really understand this? Can I explain it to someone else? Does this align with my goals, my risk tolerance, and my values? If the answer is no, walk away. If the answer is yes, then go all in with confidence, because clarity isn't just a strategy, it's a superpower. Focus and discipline are often seen as personality traits, something you either have or you don't. But the truth is, they're habits that you can build, train, and strengthen just like muscles. And in the world of investment, focus and discipline are not just helpful, they're non-negotiable. They are the difference between building long term wealth and constantly starting over. We live in a world full of distractions, new trends pop up daily. People chase shiny objects and panic at the first sign of volatility. But the most successful investors, the ones who actually achieve financial independence, they've mastered the art of tuning out the noise and sticking to their strategy. They aren't moved by headlines. They aren't tempted by every new idea. They know their plan and they execute with consistency. Discipline means showing up for your future self even when it's boring, and let's be honest, good investing is boring most of the time. It's putting money into the same index fund every month. It's automating your contributions. It's rebalancing your portfolio once or twice a year. It's reviewing your progress quarterly, not daily. That's not glamorous, but that's where the wealth is built. People want excitement, but excitement is often the enemy of results. The people chasing excitement are usually the same people riding emotional highs and lows with their money. One day they're confident, the next they're panicking. One month they're investing, the next they're pulling out, and that lack of discipline keeps them stuck. You cannot build anything meaningful with that kind of inconsistency. Focus means filtering out what doesn't serve your goals. It means not comparing your investment journey to someone else's. Maybe someone you know is flipping real estate, someone else is trading crypto, another person is deep into private equity. That's great for them. But what are you focused on? What works for your risk profile, your time horizon, your income level, your lifestyle? Because when you try to copy someone else's strategy without understanding their full context, you're not investing, you're imitating. An imitation without clarity leads to frustration. Focus is about depth over width. It's better to deeply understand a few key investment vehicles and become consistent with them than to spread yourself thin across too many things you barely understand. Discipline also protects you from yourself because, let's be real, you are your biggest financial risk. Your impulses, your fears, your ego, your short-term thinking, that's what usually derails people, not the market. The disciplined investor knows how to pause. They know how to follow their rules. They have checklists. They don't let hype decide where their money goes. They have boundaries, timelines, and a long-term perspective. They're okay missing out on a quick win if it means staying on track for a bigger victory. They don't jump ship when things get hard because they understand that long-term investing means embracing some discomfort now to enjoy freedom later. Focus and discipline also give you peace. When you're not constantly chasing trends or reacting emotionally, you gain mental clarity. You start thinking strategically, not reactively. You see the bigger picture. You understand how small, consistent actions today stack up into massive results over time. That peace allows you to make smarter decisions, take calculated risks, and stay grounded no matter what the market does. Because you've trained yourself not to be reactive, you've trained yourself to be reliable. Building this kind of focus and discipline isn't about willpower, it's about systems. You need to build systems that reinforce the habits you want. Automate your investments so you're not relying on motivation. Schedule regular reviews of your finances so you can track progress without obsessing. Create written rules for when you will and won't make a move. Use tools that track your net worth so you're motivated by real data, not your feelings. The more you systemize your investment process, the easier it is to stay disciplined. It's no longer about how you feel on any given day, it's about what your system is set up to do. Focus and discipline are also what allow you to scale. Once you've mastered a basic investment habit, say, consistently contributing to your retirement account, you can then expand that system to other areas. Maybe you start investing in a taxable brokerage account. Maybe you build out a real estate portfolio. Maybe you invest in your business, but you do it one layer at a time, not all at once, because you know that scale only works if the foundation is solid. And your foundation is built on consistency. Let's be clear, there will be setbacks. The market will drop. You will have months where your income is tight. You might make a bad call or miss an opportunity. That's life, but focus and discipline help you recover. They keep you from spiraling. They remind you of your plan. They bring you back to center. Because when everyone else is reacting in chaos, the focused and disciplined investor is calm, collected, and prepared. They've already decided who they are and how they behave when things get tough. That's where real power is. So if you want to build wealth, don't just ask yourself what to invest in. Ask yourself how you're going to stay focused. Ask yourself how you're going to build discipline, because the people who reach financial independence, they're not the lucky ones. They're the consistent ones, the ones who showed up when it was boring. The ones who kept going when it was hard, the ones who stayed focused when everyone else got distracted. That can be you if you're willing to choose discipline over drama and focus over noise. Consistency and patience are two of the most underrated but powerful qualities in investment strategy. Everyone wants the secret sauce, the hot tip, the overnight win, but real wealth, sustainable wealth, is built slowly and methodically over time. The reason most people don't get rich isn't because they lack intelligence or opportunity. It's because they lack the stamina to stay the course. We live in a fast-paced, instant gratification culture that rewards urgency and glamorizes speed. But in the world of investing, speed is often a liability. Wealth isn't built in viral moments or impulsive trades. It's built in the quiet, steady repetition of the right actions over years, sometimes decades. Consistency is not about perfection, it's about progress. It's about showing up every single month, making that contribution to your portfolio, no matter what the headlines say. It's about maintaining your financial habits, whether the market is booming or dipping. It's about not skipping the boring parts, the budgeting, the saving, the tracking. The people who win in this game are the ones who keep going even when it feels like nothing is happening. Because something is happening, you're compounding. Your money is working even if it doesn't always look exciting. The beauty of compound interest is that its impact is invisible at first, but then almost suddenly it explodes. That's the reward for being consistent. Patience is the companion to consistency. Without patience, consistency will feel like a burden. You'll start to question yourself. You'll look around at people flashing quick success and feel like you're doing something wrong. But you're not, you're just doing the thing that works. The market rewards patience. Assets grow in value over time. Smart investments pay off over time. And the investor who can resist the urge to jump ship or chase the next big thing will always outperform the one who's constantly switching strategies. Patience is power. It's emotional discipline. It's saying, I trust the process, I trust myself, I don't need to see fireworks to believe this is working. One of the most damaging myths in personal finance is the idea that rich people know something you don't. They don't. What they have, or at least what many self-made wealthy individuals have, is a long-term vision and the ability to delay gratification. That's it. They didn't get distracted by hype. They didn't let fear control their decisions. They picked a lane and stayed in it long enough to let the results catch up. That's available to you too, but it requires a mindset shift. You have to start thinking in years, not weeks, in decades, not days. You have to start valuing consistency over intensity. Flashy wins come and go, but consistent action leaves a legacy. This doesn't mean you can't ever pivot or adjust your investment strategy. Of course you can. But those changes should be intentional, data-driven, and rare, not based on emotion. Consistency doesn't mean rigidity. It means being reliably aligned with your goals. So if you do make a change, it should be because your goals evolved, not because you panicked. That's the difference between an amateur investor and a seasoned one. One reacts, the other responds, and the power to respond well is developed through the practice of consistent, patient behavior. There will be moments that test you. Market downturns, personal financial setbacks, temptations to spend instead of invest. These are not exceptions, they are part of the process. The way you handle those moments will define your results. Will you give up or will you keep going? Will you delay your progress or double down on your commitment? These are choices you make over and over again, and the more you choose consistency and patience, the more natural they become. They stop feeling like effort and start becoming your new baseline. Let's be real, this is not what most people want to hear. Most people want a shortcut. They want something faster, something easier. But I'm not here to tell you what you want to hear. I'm here to tell you what actually works, and what works is showing up month after month, year after year, with the same intentional energy, even when it's boring. Especially when it's boring, because the boring stuff is what builds the foundation. The boring stuff is what gives you options in life. The boring stuff is what buys you freedom. Think of your investment strategy like a garden. You plant the seeds, that's your capital. You water it regularly, that's your monthly contributions. You remove the weeds, that's reviewing your expenses, minimizing bad debt, and making smart financial choices. And then you wait. You don't dig up the seed to check if it's growing. You trust that growth is happening beneath the surface. You give it time, and when the harvest comes, it will feel sudden, but it wasn't. It was built in all those consistent, patient decisions you made when no one was watching. So the next time you feel behind, or you're tempted to pivot for the sake of novelty, I want you to remember this. Every dollar invested with intention is a vote for your future. Every small action compounded over time is more powerful than any one-time lucky break. Wealth isn't a lottery ticket, it's a system, and that system is built on you doing the right things over and over again for longer than most people are willing to. That's not flashy, that's not sexy, but it is effective. It is how wealth is built. It is how freedom is earned, and you are absolutely capable of doing it. The moment you put all your money in one place, you're betting against yourself. No matter how confident you are in a single investment, whether it's a hot stock, a booming industry, or a piece of property that feels like a sure thing, if all your capital is locked into that one place, you've given up control. You've given up safety, and let me tell you something. Smart investors don't gamble, they prepare, they protect, they diversify, because in the world of wealth building, risk isn't something to be avoided, it's something to be managed. And the best tool for managing risk isn't luck, isn't timing, isn't even knowledge, it's diversification. It's your financial seatbelt, it's your safety net, it's the strategy that ensures that one wrong move, one market dip, one missed prediction doesn't wipe you out. Imagine you're building a table. If it only has one leg, it's going to fall the moment pressure hits. Even 2 or 3 legs make it shaky, but a well-built table with 4 or more legs, that's stable. That can take some weight. That's what diversification is. It's adding more legs to your financial table so that your wealth isn't relying on a single pillar. Maybe stocks are one leg, real estate is another. Index funds, bonds, a small business, even digital assets, those become your other legs. You don't need 20, but you do need more than one. You need a structure that's built to last. Stocks are powerful wealth builders, no doubt. They offer growth potential, liquidity, and in some cases dividends, but they're also volatile. We've seen it. One political announcement, one earnings report, one global event, and markets move fast. If all your wealth is riding on that wave, you're exposed. That's where real estate comes in. It's not just about owning property, it's about creating balance. Real estate has its own rhythm, its own pace. It appreciates differently, it cash flows, it offers leverage, it gives you both income and growth potential, especially if you buy right and manage well. So while your stock portfolio might be reacting to headlines, your rental property is still sending you monthly rent checks. That's diversification in action. Index funds are another game changer. They offer exposure to entire markets, the S&P 500, international stocks, specific sectors, all through one investment. And because they're passively managed and broad-based, they lower your fees and your risk at the same time. You're not betting on one company, you're betting on the market as a whole, and historically, that's been a pretty safe bet over the long term. Index funds help even out your portfolio, especially when individual stocks get too hot or too cold. They bring calm to the chaos, and that calm is what gives you staying power. Diversification isn't about playing it safe. It's about playing it smart. It's about knowing that no matter what happens in the world, inflation spikes, interest rates move, tech stocks tank, real estate cools off, you're covered, you're balanced. You've created a structure that isn't just built for growth, it's built for resilience. And in a world where change is the only constant, resilience is everything. It keeps you in the game when other people are panicking. It allows you to think long term while others are making emotional short-term decisions. Now, diversification doesn't mean random. This isn't about throwing money in 10 different directions and hoping something sticks. It's about being intentional. It's about building a portfolio that reflects your goals, your risk tolerance, and your timeline. Maybe you're heavier in real estate because you understand it and you want cash flow. Maybe you lean more toward index funds because you want hands-off investing and compound growth. That's fine. What matters is that no single asset class owns you. No single market controls your fate. Because if you lose control of your strategy, you lose control of your freedom. One of the most beautiful things about diversification is that it allows you to stay calm when things get messy. When the markets drop, and they will, you won't feel paralyzed. You won't feel defeated. You'll know that part of your portfolio is weathering the storm, and that confidence is priceless. It lets you stay the course, keep investing, and even take advantage of opportunities that others are too scared to see. Because while they're trying to time the market, you've already designed a strategy that performs over time. That's the power of preparation. I don't want you chasing trends. I don't want you riding emotional highs or reacting to every economic headline. That's not a strategy, that's stress, and stress does not build wealth. Strategy does, discipline does, diversification does. It's the foundation that allows all the other parts of your financial life to thrive. It gives you breathing room, it gives you leverage, it gives you options, and options are freedom. You don't need to be an expert in every asset class to diversify. You need to educate yourself just enough to make intentional choices. You need to ask the right questions. What percentage of my portfolio is in growth? What's in income-producing assets? How much do I have in high-risk versus stable investments? These are questions a real wealth builder asks themselves not once, but regularly. Because your life will evolve, your goals will change, and your portfolio should evolve with it. But the principle stays the same. Never depend on a single outcome. Never let one market dictate your entire financial future. Spread your risk, build your wealth, protect your freedom. That's what it means to think like an investor. That's what it means to play the long game. The most overlooked yet powerful part of any investment strategy is consistency. People talk a lot about returns, about timing the market, about finding the next big thing, but very few are willing to talk about the real work. The daily, weekly, monthly discipline of showing up financially. And let me be very honest with you, it's not sexy. It doesn't give you an adrenaline rush, but it works, it wins, because wealth is not built on big moments, it's built on small decisions repeated over time. The difference between someone who's financially thriving and someone who's stuck isn't usually intelligence, it's consistency. Consistent action, consistent investing, consistent attention to their financial future. That's the real flex. That's the millionaire mindset in action. Think about this. Someone who invests just $500 every single month into a solid index fund over 30 years, assuming a modest 8% return, ends up with over $750,000. Not because they made a massive one-time move, not because they waited for the market to crash and then jumped in, but because they stayed in the game, they committed to the process. And that's what I want you to understand, that consistency is the quiet engine behind every great financial story. Even when it feels boring, even when it feels like it's not working, it is, and the more consistent you are, the more confidence you gain, because you stop relying on emotion and start relying on your plan. Most people are stuck in this trap of perfection. They want to wait until they know more, or until the market looks right, or until they have a larger amount to start with, and in doing that, they rob themselves of the most valuable ingredient in investing: time. Time is your best friend when you're consistent, because when you're consistent, time allows compound growth to kick in. Time allows you to ride out the dips. Time allows you to see the long-term fruit of your short-term discipline. But you can't use time to your advantage if you're starting and stopping all the time, or worse, never starting at all. And let's get one thing clear: consistency doesn't mean you won't make mistakes. It means you won't quit when you do. Consistency allows you to learn, to adjust, to evolve. Maybe your first investment wasn't perfect. That's okay. Maybe you bought a stock that didn't perform, or a rental that didn't cash flow the way you hoped. That's part of the game. The difference is that a consistent investor doesn't get emotional and abandon the plan. They assess, they pivot, and they keep moving. That mindset, that relentless follow through, is what separates financial winners from people who are constantly starting over. There's also power in automating your consistency. Set up automatic transfers. Schedule your investments like you schedule your workouts. Remove the need for willpower and replace it with systems, because the more you can remove friction from your process, the easier it becomes to stick with it. If you have to log in and think about it every time, you're going to negotiate with yourself. And let me tell you that negotiation is where most people lose. They skip 1 month, then 2, and suddenly they are out of the habit. But if it's automatic, it just happens, whether you're motivated or not, whether you remember or not. That's where real consistency lives. Now, I get it, life happens. There are seasons where money is tight. There are emergencies, setbacks, unexpected expenses. But even then, even if you have to lower the amount, the act of staying consistent matters more than the size of the contribution. You're reinforcing the habit. You're staying connected to your goal, and that energy builds momentum, because momentum is everything in investing. It's the difference between looking at your portfolio with pride versus regret. And here's what I've seen time and time again: consistent investors sleep better. They're not constantly checking the markets. They're not panicked when headlines change, because they know they've built a system and they trust that system. We live in a world that rewards urgency, that wants you to chase what's hot and move fast. But true wealth doesn't come from jumping around. It comes from rooting down, from committing, from choosing to build brick by brick, month by month. And when you combine that consistency with smart strategy, with diversified investments, and with a long-term vision, that's when the magic happens. That's when you stop chasing money and start creating freedom. That's when your money starts working harder than you do. So no, you don't need to be a genius. You don't need to be perfect. You don't need to catch every trend or predict every downturn. You just need to decide. Decide that your future is worth the discipline. Decide that your freedom is worth the habit. Decide that even if it takes time, you're in it for the long haul, because money grows where attention goes. And when you give consistent, intentional attention to your finances, there is no limit to what you can create. Consistency isn't glamorous, but it is powerful, it is dependable, it is liberating. And the sooner you embrace it, the faster you'll step into the kind of financial life that doesn't just look good from the outside, but feels solid from the inside. Not rushed, not risky, just resilient, reliable, and real. That's the life we're building, not someday, but starting now.